All right, evening everyone. It's been a while since my last video. Now it's Sunday evening for me. Last video was on Thursday. I've been on the road, so this is pretty much the earliest I could do one. Now I'm going to cover the close from Friday. Very exciting week, very exciting day on Friday. Some significant indicators in my opinion. So let's start with the markets. The S&P. Well, to start off, it did exactly what we thought. So we broke down from this ascending support. It was a very ugly close on Thursday. And then Friday, we just gapped down. Now, obviously, the markets closed higher than they opened, but don't be fooled by this green candle. It's a totally red day. And as you can see, TradingView captured the percentage move. And by the way, I'm using the white background now. I think it's just easier on the eye for some of us, especially if you're squinting your eyes in the sun. It's something I realized, just a little cosmetic change I did. And I'll do a few more cosmetic changes to my channel just to make it more appealing. I think it's just easier. For example, I was in the south of France and I couldn't see anything um, when sort of zooming in on my own videos or even TradingView. So I hope some of you appreciate it. Let me know, otherwise I can make it maybe a grayer background rather than completely dark, which I usually prefer. But anyway, the markets totally destroyed on Friday. They did recover some of their losses and from the lows, but I think don't be fooled. We've totally lost support. We may, I don't know, fill the gap, but to me, it's done. We're going back down to 370s. We've called the whole move for a while, really. So very, very happy about that. One thing, and I'll just quickly look at the Nasdaq, same sort of pattern. But the one aspect I saw out of these four markets, now obviously the Dow has been, actually it was one of the weaker ones because it had actually pierced its low earlier than the others. So, but that said, it was only down 0.5% by the close. Nasdaq also recovered quite a lot of its losses, but the Russell 2000, which has been lagging on the way down, so it's been quite strong, that was really underperforming. On Friday. It was leading the drop, put it that way. So as soon as something I was watching very close zoomed in on the 1 minute, as soon as the Russell started to flush, to drop, to break down new lows, everything would follow. Obviously, all these markets follow each other, but in this case, the Russell was leading the way down, something that I've been looking forward to because normally the Russell 2000 is, the small caps. It's usually the leading indicator on the way down. It used to be on the way up, but Nasdaq took over. But anyway, it's really the Russell and the Nasdaq that usually lead the way up or down. And I would say we're returning, at least the Russell is returning to its regularly scheduled programming. So just something to look out for. The VIX, on the other hand, I think underperformed. Now, if you see, it barely closed green, whereas the markets got slightly crushed. So I would have expected it to be up 5%. And something else I noticed during the day is that it was unable to rally. And as the markets were making new lows, it was nowhere near its high of day. So, and it's a bit surprising because I'd expect the VIX to be testing 30 by now, probably. So maybe a few participants just don't believe that volatility should be priced that high. I think it should. So I think maybe when we start to go down, test the low 370s, the VIX should start, testing its 30 range. So, but let's see. I really do expect a lot of resistance in the 30s. Not only this descending line, also this ascending prior support becomes resistance. So around this area, I don't know if I can make one of those little circular patterns, but around this area, I expect quite a lot of resistance. So, and then especially when we go up to the high 30s, because 38, 40 basically has been very, very hard to break for a long time, even going back several years. But as soon as we take out this sort of 40 zone, we start to run, then something big is happening. So we could probably move to 80 very quickly, which is a 100% move. So I wonder what that equates to in the markets. But yeah, something to look forward to. Just watch the Russel and the Nasdaq on the way down. And again, my thesis remains that we just overall go lower. I mean, maybe we just sort of close the gap. I actually don't think so. I think we won't even close the gap. I think we're just going to basically continue the orderly decline. This is an orderly decline. You know, we don't have any limit downs and circuit breakers or anything. This isn't like the Corona days. This is very, very orderly, technical, lower highs, lower lows, which is also why I called this sort of move. Okay, it did go a little higher than I thought, but starting here, then there, and then down we go. Little pump, down we go. We lose ascending, down we go. And, you know, 3-4 trading days, we could be at 370, maybe even less. So we're going to look forward to that on Monday. Moving on to yields. Now, one thing about yields is I feel like they've topped out. And that's not because the whole pattern is going to change and the markets are going to go up. I think it's a bit of a push and pull game with yields. You know, I think a lot of people are selling bonds, sending yields up. That's what's been happening because interest rates are going up. But then again, as markets start to crash, people think, okay, where do I put my money? Because the 60-40 thesis that used to be in play, you know, put 60% in stocks, put 40% in bonds, that hasn't been working for the first time ever, I would say, or at least for the first time in a long time, since the markets have started to crash early this year. So people who've been in bonds and stocks have just been destroyed on both from both angles. But as people wonder where do they put their money, they started to put it in bonds. So and you know it's a good, sometimes it's a good bounce. So let's just take the 10-year, for example. As we went up here, you know, you put your money in bonds. Now I'm looking at yields, so obviously it's inverted, but look at that, it's a 25% drop. So it's quite a nice move to be in bonds and to earn interest whilst you make a nice bounce, or at least, you know, in this case, inverted bounce. And I just feel like we're double topping. I have been looking forward to the Pierce because all of the others, okay, this one just about, but the 2-year especially broke out. But, you know, at some point things get overextended, they come back down, maybe test their prior support, prior resistance becomes support, and then go back up. Eventually, I think we keep going up with the Fed. But because of the inability to break out, or at least to continue, and also this coincides with what I've seen been going on with the dollar, the DXY at 110, I feel like we're reversing. And especially on Friday, it was a bit of a signal as the markets continued to drop, but yields didn't go up. To me, I think we're going to have a bit of a reversal in the bonds, in the yields, sorry. So the yields will come down, the bonds will start to go up. They've obviously been going down. So I'm not sure how that will translate into market price action. Maybe we'll get a bit of a bounce. I don't think it matters in the grand scheme of things. Because then again, when you buy bonds, you might be selling your stock to buy bonds, which means stocks continue to go lower. So I think it's more of a bond move rather than a change in stock direction. So I keep it simple. Stocks, stay out, let them find a bottoming pattern. I don't think they'll bottom really much. I think we'll go down to 370, 372 maybe bounce a little bit and then test the lows and then flush. Whereas bonds are more likely, in my opinion, to actually just drop a little bit. You know, I don't usually look at the 1 year, but let's just say at least to prior support. The 2 years are more significant. Again, at least to prior resistance to become support. So 3.4, the 10-year failing here, let's say at least to 3.1. Why not 3? Don't want to start drawing too many trend lines. Just make a rough one for now. You know, 3 may be lower and then it can test it later. 30-year. Actually, this one looks a bit cleaner. Sometimes the eye can see this a bit quickly. So yeah, I just feel like the bonds could bounce, the yields could therefore drop, but I don't think that means a change in general trend pattern for the markets. So something to look out for. And also just one other point, something I forgot to mention in the other videos is watch out for the German and Italian yields. Now they follow the American ones, so they will also come back down if I'm correct. But the 10 years of, Italy, which is the most troubled nation, I would say. If Italy gets kicked out of the EU, forget it. The EU crumbles, the euro crumbles. That's my general opinion. And the German obviously is the engine of the DAX, the European markets. Both will follow, the 10-year of the US Treasury. So let's just keep an eye on that for a bit of a reversal before going back to test it and ultimately breaking out. That also coincides, yields, the bounce, the reversal in yields coincides with what I see happening in the 10-year. I feel like we've got a bit of trouble breaking out. I still think overall we go higher because the general pattern is markets will tank. And if markets start to tank, people will be selling stocks, moving into cash, moving into the dollar specifically. Dollar is king in such events. And I think that will continue. But at the moment, we're pretty extended here on the daily, the weekly, the monthly, especially this pattern here. I've really got my eye on it. Plus, remember, we've just made a crazy move. So maybe we go back lower. I've already mentioned this, but with what I saw on Friday, especially in the bonds, I just feel like we could come back. It just takes a bit too much effort to break out right now. So now I'm heavily in cash. I've got about 50% in the dollar of my portfolio in the dollar. So I don't mind it going higher. I think the whole markets will go down, the dollar will go higher. For me, this continuing is great. So I can buy stocks cheap, specifically commodity resource-based stocks. But I just feel like we might come down, and that obviously will send commodities. It should send commodities higher. It depends obviously what the markets are doing too, because I'm very much exposed to stocks related to commodities or energy. But something to look out for, the dollar and bonds reversing. Now let's move to gold and silver. Okay, these had very interesting moves. Now I think on Thursday we saw the breakdown of gold sort of live. Well, I wasn't live, but I was as I was recording the video, it happened. Now, what happened after? And silver's been outperforming gold for some time, but silver was pretty impressive still, even during the rout. I mean, look at this. You couldn't even recognize the fact that they're cousins here. Gold is totally now. Silver's been weaker for a while. If I just not to switch charts too often, but silver's really lost a lot of ground percentage-wise. Gold also, but not that much. But then recently we saw gold, go to its lows, 1680, had a little bounce, and then flushed. Now, we did close green on Friday, but silver, I think it closed 2% up or something. You have to ignore the sort of reset after in the evening, but silver really is, and it's all after, and we noticed this breakout here. I mentioned it back then, but there was this huge move on September the 12th. I think it was 6% at the high of day. And for me, that marked, I don't want to call it the bottom, but a very, very strong support zone at 18 or just below. And I said, if we go back down to 18-ish, I'm buying. I'm buying quite a bit. And even if it goes lower, for me, it's giving me the signal like this is heavy support, buy here. And then, if we go lower, just leave it for a while. You've got a good area. Gold, on the other hand, it's lost its support. It could go lower. It should go lower, to be honest. And I want it to. I'm not sure how far gold could. I think 1600. Let's keep it simple with psychological numbers. There's no great support around this area. I do see support around 1580. So, let's call it 1600 and then a bit of a flush below and then a bounce back up. That typically happens. So give this $20 buffer zone a bit of slack. I just feel like 1600, 1580 goodbye zone also coincides with this previous support. So previous resistance here. Obviously, if we go below that, we'll talk about March 2020 lows. Probably a little stop off at 1500, but again, 1480 just below maybe. But we don't have to discuss that just yet. At the moment, I feel like we're retracing prior support. Happens a lot. You know, maybe we even venture higher, high 1680s, and then we come back down and test it, and then we flush. Now, I heard a few traders that I respect, particular, what's his name, Nick Santiago from In the Money Stocks. He suggested that he's bullish silver since $18. I really respect his opinion, but he's bearish gold. And a lot of people thought, well, you know, how can you be, it's a dichotomy. How can you be bullish silver but bearish gold? And it's true, but I understand why he's saying it. You can have gold down 0.5% and silver up 1%. I've seen these kind of days. It's a bit like silver being up 2% and gold being up flat, which is not even up. So you can have these discrepancies. It's rare, but it's, for me, it's like relative strength. It just means, look, silver is strong where it is. And that's the kind of impression I've got on silver. A very, very strong close on Friday. And, you know, imagine we go a little high. Imagine the dollar reverses, the bonds start to move up, the yields come down. Silver could very quickly be at 20. Then what? Then we're testing this breakout, this downtrend line, and then we move higher. Then silver looks absolutely amazing. And that can happen in 1-2 days. Whilst gold is sort of, you know, retracing its breakdown, not even taking out 1700. So I just feel like I don't want to buy. That's another thing. I actually bought on Friday. I bought some silver stocks. I bought what I previously sold. I'll go over that when I quickly look at my portfolio stocks in about 2 minutes. But just to summarize, I feel like silver is very strong. I do think it can go lower if the markets go down, if there's a continuation of panic selling for sure. You know, everything goes down as usual. But relatively speaking, it's definitely stronger than gold at the moment. And for that reason, I bought back what I last sold, put it that way. I've seen enough in silver. And I also think that it's possible for gold to go down and silver to go up. Not on a big scale, not with like gold down 1%, silver up 3%. But I feel like you can have 1.5% difference between both of them, whether gold's down or gold's up. You can have gold up 0.5%, silver up 2% easily, which is kind of what happened on Friday. But just keep your eye on this difference here between the two. It's very interesting, and for me, it signals a bit of a bullish zone for silver. You know, like you shall not pass, Gandalf style, real strength, probably in the physical market. I don't want to go into all this LBMA. You know, you've heard it all before, all the manipulation and stuff, i.e., news and rumors. Forget it. I stick to charts, and that paints a picture in itself. So that's all I'll say about that. Now, moving on to the GDX, the GDXJ. Decent, but you'd expect them to be a little better given that silver was up about 2%. Now, I was expecting a bit more strength. I bought intraday, actually bought higher than where it was. I bought silver stocks. I think I ended up buying silver stocks where they closed. I mean, I bought them intraday, but then it went down, then went back up. But let's just say we're buying at a, let me just, I mean, I bought back what I sold up here. Okay, now I'm looking at the GDXJ. I sold this zone, the downtrend line, thinking we wouldn't break out. And then I sold the breakout. So these two areas I bought back on Friday. Not that much, but it's just what I sold. And I went over what I sold. I actually sold it when I was when my girlfriend was driving in the car. It's quite funny. So I thought, oh, you know, maybe I should wait for the flush, but I thought, okay, let me just buy back what I sold. If it goes lower, it's still part of the general thesis. It's just a bit of swing trading around my long-term core investment positions. So it's kind of what I've been doing for a few years. So, and in my opinion, the thesis doesn't change. We go all the way back up eventually. I just want to maximize profit or minimize losses on the way down. Let's put it that way. So at the moment, We're sort of at a double bottom zone. Let's see what happens. If we move back up, I'll be selling the same zone I sold last time, at least the, let's call it 32 or just 31.89 on GDXJ. And GDX, it would be, well, I don't know, let's call it around 25. So that's what I bought it for in case the markets bounce a little bit. Let's say the bonds rally, the yields drop, the dollar drops, the markets rally a bit more, gold starts to fill its flush and test 1700, and silver keeps running. Everything will look really good. Oh my God, this is maybe the bounce. I'll sell into it straight away, waiting for the move back down. So that's why I did it. I just thought, and it was mainly led by what my impression on silver. Silver looked very good. And in particular is Newmont. Now, that's nothing to do with silver. Newmont is a gold producer. At the moment, I'm just looking at Barrick Gold. You can see we're at that double bottom area. But Newmont was up 3%. And if I look at Newmont, obviously it's come down a lot, like all of them, but it came down a lot more lately. And it's a very senior, strong defensive stock, great dividends. It's just, you ask a couple of experts in the industry, and that's one of the top 2, 3 seniors for sure in everyone's list. So Newmont for me is an absolute beast. And if you can see here, if I do the 1 hour chart, probably makes more sense. Look at this. There's too many lines now. Look at this descending line, and it's pretty rough. But if we take out 44.20, 44.50 for sure, we're breaking out. And the next stop is straight away 46.50. That's pretty damn bullish. And that is a senior stock. And that alone will hold the GDX up. So combine silver with Newmont, the moves in silver, with the strength shown in Newmont, aka the GDX. And you've got what you need for a pretty nice bounce in gold and silver stocks. I really believe that, especially, and you need this, especially if bonds start to reverse and go up, yields down, the dollar starts to fade a bit, therefore commodities go up, helping gold and silver. And of course, if you have general markets not flushing for 1 or 2 days, if they have a little bit of a bounce, I think that's possible. That's why I bought silver stocks. And I'm not going to go through them all. They all usually have the same sort of chart patterns. I bought the silver stock, so let's just look at them. I bought AG. I think it was at 770. So obviously it's a little lower than where it was. I think I bought it around here. Fortuna, I think, is where close where I bought it. EXK, I think I bought it a little bit lower, 301 or something. CDE 286, if I'm not mistaken. Basically where they closed, on average. TPRFF, I bought at 246. Pan American Silver, I bought at 71. It really was just aiming for the silver stocks. I also bought Crown Columbia just because it was at its kind of lows. And I feel like it will bounce. I believe that's it. I'm trying to sell some Rainer actually, just on 30. Even though it's a silver stock, I think it's had a hell of a move, though it's had good news out. So basically, those were the stocks I bought, focused on silver, and I'm looking for a small bounce. And that is all I need to say about the gold and silver stocks. But yeah, just to recap, the Russell leading the way down, the VIX underperforming, the yields could reverse, the dollar could reverse, silver's outperforming, and Newmont is outperforming the GDX. So that's my thought. Those are my thoughts. Let me know what you think. Like, subscribe, etc. But yeah, thanks for listening.